not going to wander off. And that's exactly what's going to happen with accounting. It's tempting to think, well, I'll just automate it by using AI. But I would strongly recommend get your data really solidly organized before you do that. And when you do that, you'll realize the AI part is going to be so simple that you almost don't need the AI.
Leaders Talk, Season 2.
Hello, everybody. Hello, and welcome back. It's your favorite time of the week. It's my favorite time of the week. It's time for Leaders Talk. And as usual, I'm your intrepid host, Andrew Dupie, host of the Leaders Talk podcast and head of communications here at Leaders Brands. And today I have with me Dave McComb. So Dave McComb started his career with a consulting division of Arthur Andersen, the accounting firm. And he traveled around the world and implemented accounting systems in a dozen different companies. He co-founded a .com in the 1990s. He was in registration to go to public winter of 2000 when the .com bubble burst. So he then co-founded Semantic Arts that year and has been helping companies understand that data ever since. And for our purposes, he is the author of The Future of Accounting. Dave, welcome. So The Future of Accounting, that is a bold title. And I know we're talking a little bit about semantic and semantic arts. Kind of introduce that concept to our audience and a little bit about, what the future of accounting looks like.
Sure. Thanks, Andrew. Yeah, that title kind of snuck up on us for quite a while. The working title was going to be data-centric accounting.
Okay.
Because that's what we do. We help companies become more data-centric, understand what their data means, collapse it all together. And it was in the process of doing that to ourselves that we decided that we rethought accounting. And then finally, right toward the end, we were almost ready to go to press. And two of the reviewers said, this pretty much is the future of accounting.
Mm.
And all of a sudden we went, oh yeah, that's what we should call the book. We shouldn't call it data-centric accounting. Let's call it the future. That's what it is.
Well, explain to us a little bit. I know you've been working the book for quite some time because we first met years ago.
Right.
when
Yep.
when at the very kind of the beginning of your journey doing this. So tell me a little bit then about, what is it that makes this the future of accounting? It maybe explain data-centric
Sure.
to our audience a little bit as well.
Yeah. And this is kind of an accidental book.
Okay.
We didn't set out to write this book. What I set out to do, our practice, the data-centric approach, we call it, is sort of the opposite of what pretty much every enterprise is doing right now. Every enterprise right now has, depending on size, has hundreds to thousands. Many of our clients have tens of thousands of different application systems they use to run their business. And every one of those systems has its own database and its own data model, and they call things different. They structure things different. They have different identifiers. Everything is different about them, arbitrarily different.
Okay.
And it turns out they spend an amazing amount of their budget trying to reconcile, interface, integrate, do all this kind of stuff, but it's very patchwork. It's pretty horrible.
Yeah.
And we concluded two things that are non-obvious. The first one is, despite the fact that there are thousands of data models, and each one of which is complex, you would think that the sum of all of them would be even more complex. Turns out it's simple. Every business we've been in has a single simple model at its core. And when you can uncover that and understand that and then begin harmonizing data to it, everything else you do is simple. So we've been doing this now for 26 years. For about 10 years, it was a design-only exercise. We were like architects that only designed things and didn't do anything. But then we realized people weren't doing much with what we designed, so we became a design-build firm. And now we, design their future and move them into it incrementally. But then we got frustrated because our biggest clients, if you've got thousands or tens of thousands of application systems, it's going to take a long time to unwind that.
Right.
I mean, it took 40 years to to deconstruct that into the mess you have, it takes about that amount of time to fix it. So we were worried, but some of our clients are making progress, but it's
Mhm.
incremental. We thought, wouldn't it be cool if we could get one company completely converted to where it was 100% data centric, all no more applications, just one central knowledge graph running the business. So we thought, well, let's experiment on ourselves. And we already had some of our own business running this way. Our time control, project management, staff planning, several key functions are already in a knowledge graph being run properly, but there's still big chunks that aren't,
Yeah.
including especially accounting.
Hmm.
So we sat but like you said in the intro, I've worked for an accounting firm. I've built a lot of accounting systems. I know accounting pretty solid. I've run the accounting department, if you will, for our small company for 25 years. So I thought, this isn't going to be that hard. I'll just sit down, write down what I know in a semantic manner and just implement it.
Mhm.
But it turned out that as we started turning over these rocks and just asking, well, wait a minute, why is this the way it is? And what's its deeper basis? And what does this really mean? And about every couple of months, we'd go a bit deeper until, well, at one point, I got in deep enough. I thought, I need a lifeline. And that ended up being Cheryl Dunn, the partner in writing the book. She's a professor of accounting at Grand Valley State University. So she was instrumental in keeping me on the path. I don't want to do something that violates generally accepted accounting standards. And yet we have kind of removed most of the normal underpinnings of an accounting system. So, for
Right.
instance, if you've worked with accounting systems, I have, they're composed of transactions that post to ledgers, and these
Mhm.
ledgers have account numbers, and those transactions have debits and credits, and the financial reports are based on the chart of accounts, which is, the accounting numbers and all that kind of stuff. All of that is gone.
Really? That's fascinating because that sounds like to me, as a layman, what accounting's all about.
It is. That is what it's all
Yeah.
about. And so then the question is, where did it go? And it didn't all go all at once. We just were digging. Turns out the real underpinning of accounting and of business for that matter,
Hmm.
about 80% of it is just making and fulfilling commitments.
Right.
And all you're doing is keeping track of the commitments you've made and what have you done and what has your counterparty done with them so far. And that's
Hmm.
about 80% of it. The rest of it is resources. Depending on what kind of business you're in, you may be heavier on the resource side. I mean, if you're in a services business, you have almost, the only resource you have really is cash,
Hmm.
human resources, but they're very transient. So anyhow, if that is the basis, and then you realize things happen in your business but they happen not in the accounting department. Almost nothing happens in the accounting department.
Hmm.
Your truck driver fills up their truck with gasoline. That's an event. And somebody sews fabric together on an assembly line or whatever business you're in. Things are happening out there.
Right. Yeah.
We worked with a workers' compensation insurance company once, and they discovered while we were in there that they had 23 different, I guess you'd call them departments or activities where they were doing something that generated the equivalent of an invoice, but none of them called it that.
Hmm.
This division, they had a division that put those stickers or those piece of paper in an elevator that says, you've got an elevator permit. People are probably not going to die. When you do that inspection, you don't want to collect cash. That would, you know, that would make it rife for bribery and stuff.
Hmm.
So instead, you do the inspection and you bill the people for their certificate. In fact, until they pay for it, they don't get it. Or they had another division that was was credentialing physicians for some reason. I don't remember why. You had to pay for that. If people overpaid, if they had somebody who was, it was workers' compensation, was out of work, so they were paying them, but then the guy goes back to work and doesn't tell them, they have to get that money back. There's all these 23 different ways they were generating income differently. And all eventually gets to the accounting department where they have to sort it out.
Hmm.
So our realization was when these events occur, if you just capture them as they occur, and then immediately you have to figure out one of two things. Is it relating to a commitment I'd previously made, which many events are, or is this making a new commitment? And one way or the other, that's what you want to set up. The new commitment, you have to say a little bit about why did you enter into this commitment, but I won't go into too much detail on that. But so you make these commitments, all these events, either partially fulfill them, completely fulfill them. You get a bill, you make a payment, all these things happen, and you don't really need to generate a transaction. You just have the commitments, keeping track of their status through these events that have occurred to them. Uh, and then because you know why you made the commitment, you can handle all these subtle problems that accounting has. They refer to them as recognition. Does this transaction need to hit the income statement, or is it just on the balance sheet?
Mhm.
Like for instance, if you're in a company and you buy chocolate, when the chocolate arrives, do you expense it or do you put it in inventory? And in order to answer that question, you have to know why you bought the chocolate. And it's only the person
Right.
who ordered it knows, oh, we make chocolate chip cookies, therefore it's a raw material, therefore it goes into inventory on the balance sheet. No, no, this is just a treat for the executive lounge and we're going to expense it. Okay. So there's one or two things that's called recognition. Classification is also, exactly how do I want to end up reporting on this thing as it becomes fulfilled. That's classification, typically done with account numbers, but there's no reason you really need to do it with account numbers because most of the people in the firm don't know the account numbers, and you
Right.
have, and valuation. Certain events have to be valued. If you issue the chocolate from the raw material to the production line, somehow you have to figure out how should I value it. And there's a whole bunch of accounting things in there, but that's pretty much it. If you can figure out a way to do recognition, classification, valuation, that's most of accounting. You can automate accounting policy. You can automate the way you do reporting. Pretty much, pretty much all of it is automated to the
Mhm.
extent that an event occurs and it's on the books within seconds.
Right.
There's no closing process. There's no systems integration where it has to go from this system to this system, then to another system, and then finally into the accounting department and they do something and then they close the books and okay, here's no, none of that.
So you're basically streamlining it. You're taking
Yeah,
away the
actually.
silos.
Yeah, exactly.
The-
Exactly.
yeah. So, do you think that accounting kind of got this way because it wasn't automated for so long? I mean, because a lot of the big companies come from the days of ledger sheets and booking and having the
Yep.
big the big cabinets that have to be in each and every room.
Absolutely. Yep. Yep. Yeah. And when we automated it, we just literally automated what people were doing by hand. If there was a handwritten ledger that you posted to, then
Hmm.
we made a computer version of that ledger. If we had debits and credits over here to, help us not make certain kinds of adding mistakes, then we put debits and credits over here. Even though a computer is not literally going to make it's pretty easy to test whether or not your computer's adding numbers up correctly. We have, accountants do this thing, they run a trial balance to make sure all the accounts are still in balance. I don't think a set of accounts has been out of balance for decades anywhere.
Hmm.
They just don't get out of balance. It's just this thing that they do because they've always done it.
Yeah. And so basically, you said it takes a long time to work on to undo the problem. I imagine it's almost like going into a box of chords and trying to start unraveling them and find out which one was which, like your Christmas lights.
Absolutely. Yep. Yep. Yeah.
So how do we? I mean, how do we just to kind of maybe explain to some of our listeners that are maybe they've got a business or thing, and well Dave, so what are the steps that we do to actually get it streamlined? I mean, other than we've kind of explained the problem here.
Right.
So what is the solution, especially that you talk about in the future of accounting, that just for maybe for a layman like me to understand
Right.
how to make it more smooth and how to clean it up and make it work.
The first temptation, and what a lot of people are already doing and are going to do this year, is to have AI do their accounting.
That is actually where I was going to go with that because
Yep.
I'm thinking right now somebody is listening to this and saying, "Can I get my AI to just do this for me?" Yeah,
Yeah. And a lot of people are going to try this, and a handful might actually get it to partially work. It's like if you do enough experiments, a few of them will trip to it. But I think what we're going to see is what we saw for most of AI in the enterprise for the last couple of years, um, is that AI is struggling in most enterprises because of this data problem.
hmm
You know, if you have thousands of systems, you have hundreds of definitions of what a customer is, and hundreds of names of a customer, and hundreds of subtle things about customers. And so if you send your AI in there and just ask it, well, what's the cost of acquiring a customer? it it doesn't even need to hallucinate because you've
right,
got so much ambiguity there. So the answer first, you have to sort that out. You really have to get all your data in order, get it organized, get it with really strong um, semantic definitions, so that if you turn your AI loose on it, it's not going to wander off. And that's exactly what's going to happen with accounting. It's tempting to think, well, I'll just automate it by using AI. But I would strongly recommend get your data really solidly organized before you do
Hmm.
that. And when you do that, you'll realize the AI part is going to be so simple that you almost don't need the AI. I mean, we're using it. The place we're using it is just taking receipts, similar to the application that a lot of people use called Expensify. But you can take a receipt and send it to an AI, and it can mostly guess, who's the vendor, what's the date, there's a lot of numbers on a receipt, but it can,
right,
and especially if you've got your data already organized to where you're expecting, oh, these guys went on a business trip, so therefore I'm expecting an airfare, a hotel, and a couple of meals. Then, the AI can say, oh, I was looking for those things. There they are. That's probably it. That's a nice, simple problem that AI can solve.
yeah, and but you've got to get to the point where the AI can understand it.
Yeah, exactly.
Yeah.
Exactly.
So basically, you have to unravel the Christmas lights first.
Yeah. Yep. Yep.
Yeah. And I see exactly your point though, because you're right. AI is only going to understand what it can understand. It's only going to understand the data that you feed it. And if you're feeding it data that's completely disjointed and all over the place, the AI is probably going to try to please you and not create a pleasing result.
Right. And the AI was trained on a corpus of data that's just out there. And
Yeah.
so it has ideas of what a customer is, but actually every business has its own very specific and personal to themselves idea. Some usually two or three, the different departments will have different ideas, but there are ways to reconcile those. There are ways to say,
Yeah.
as far as this department is concerned, that's a customer. And over here, well, no, this department would not call that person a customer. They'd call them a prospect or something. I don't know. But that
Yeah.
stuff can be sorted out. But actually having a huge corpus of what you learned on the internet isn't helpful.
Right. Yeah. I mean, the way I see this here, just from what you described from your book, is that there's two parts of the process. One part is bespoke, as in you have to go in and actually find how the company works, how a specific can work, and that's where it's going to need somebody like you, a human
Mhm.
being that can come in and find the definitions and find the things. But then the second part, I wouldn't necessarily call it maybe a one size fits all, but the second part can be more that streamlined.
Mhm.
We'll use the word one size fits all just as a quotation, but that then makes it easier that you can kind of apply to multiple things and it will all work the same way.
Yeah. Yep. Yeah. I think that's pretty right.
Okay. Well, Dave. I mean, as we kind of wrap up, I mean, we could probably talk about this for hours, but that's
I
what the book
could.
is for.
Yeah. Right. Right.
So,
Yep.
ladies and gentlemen, we'll get to how you can pick that up in here in just a second. But what's something that a lot of our listeners are going to be business leaders. There's a lot of CEOs, a lot of entrepreneurs out there. What's kind of a golden nugget for them? What's something that you have, maybe something you left in your book, or you want them to dig into deeper that they can really kind of take away from this and maybe start to consider, should I start to completely redo my accounting system to try and streamline it?
Yeah. I suppose the nugget is that simplicity is your friend.
Hmm.
And you have inadvertently created an amazing amount of complexity with all the systems you have and little bits of accounting everywhere. And if you're not careful, you're going to take that complexity up another notch with AI. We can
Yeah.
generate stuff with AI so rapidly now. It's that by itself is not going to make it simpler. But so I think the nugget is it is possible and it's desirable to drastically reduce the amount of complexity you have in your systems.
Well, ladies and gentlemen, the book is The Future of Accounting. Dave, how can our audience find out a little bit more about you and maybe get in contact with you and see if there's steps they can take to start getting help?
You bet. You bet. Our website is semanticarts.com. That's semanticarts.com. And that's, pretty much the best jumping off point.
Perfect. Yep. And ladies and gentlemen, that link's down below, as are links to The Future of Accounting. It's got great reviews. It's doing well. We're very excited to be able to talk about it today. And Dave, maybe we'll circle back a little bit later after we've had some time, because I think we've only kind of scratched the surface on this. So, maybe there's a time to come back and after AI has had a chance to percolate a little more in our world, which this rate's like a week.
Right.
And,
Right.
if it still hasn't blown us up, maybe we'll talk a little more about this.
Excellent. Excellent. Thank you, Andrew. Let's do that.
Thank you, Dave.